Thank you, Andreas, and thank you for introduction. Good day, everyone. I'm pleased to present our mobility strategy today. We are starting with the highlights in actual 2025. Then we're going to talk about the mobility market. Most important part will be point number 3, the business update, then medium-term plan with the financial for Inspire 2027 and the long-term outlook 2030. So going to the highlights 2025, we see on the left our achievement. We delivered to expectation. We did our budget. And if we look at the right, we see the main financial performance highlights. Revenue growth plus 13% year over year. Profitability improvement 0.4 point percentage, and the book-to-bill 1.2 times to the revenue. We have some key important achievement on key project deliveries across London, high-speed trains, Baltimore, Sanning, but also major order intake like Turin, like Pittsburgh, like UK, or Taiwan signaling. And also going in the next page, when we're talking about digital HMAX, we see contract signed with Tobu Railway in Japan, Turin Metro Line 2 or Copenhagen. You can see there that last year, the same presentation, we declare 2,000 trains already having our HMAX platform. This year, we can have 2,500, of which 35% plus are with not Hitachi fleet. We've been investing on digital growth. On the left, the acquisition announced back in summer last year, it's Omnicom. It's a very high-tech company for sensor technology. They have laser sensor, LiDAR sensors. We want to create a strong foundation for our HMAX platform. So we want to have digital proprietary technology to support good quality of data. On the right, it's Hagerstown plant. It's the footprint in the United States. It's a combination of the expertise of one Hitachi. It's Hitachi Digital, Hitachi Connective Industry, Hitachi Energy, all together to have a state-of-the-art plant. If you give me a couple of minutes, I would like to show you a quick video. Please, the video.
A new digital factory built for a new culture of urban mobility. Hitachi has imagined the future, driven by innovation and sustainability, inspired by a deep respect for people and the planet. Today, the Hagerstown plant is home to over 400 employees constantly evolving and growing in line with technological innovation. Here, we've crafted a truly unique working environment where the power of AI blends seamlessly with operational excellence, the superior quality of our products, and the extraordinary talent of our people. The Hagerstown plant marks a turning point, setting a new benchmark in rail manufacturing and play a key role to the One Hitachi's global goals. Our latest challenge? The creation of the Hitachi Customer Experience Center, a place where technology comes to life and innovation can be experienced firsthand by our customers. Can you see your future? We did it.
Thank you. 2 years ago, we also announced the acquisition of Clever Devices. It's a company based in the United States, 220 million plus revenue, over 600 employees. It's a leading provider of software and technology solutions for intelligent transportation systems, serving mass transit agencies across North America and globally. It's a very important step into expanding HMAX because we do HMAX on rail. Clever Devices is doing HMAX on other kind of mobility like buses. So it's an expansion of HMAX, but it's also our firm step into multimodality. And combining the data of rail with other mass transit transportation, we can also have access to much wider range of data and go really into the multimodality and explore different stream of revenues. Now, let's go to the market overview. We believe that the future of mobility is at the intersection of three powerful trends that are transforming the mobility market. There is more volume, which is driven by population growth, but also the energy cost that's increasing. There is a wider sustainability concept, which is not only reduction of carbon footprint, but it's also more affordable, more mobility solution, and the digitalization is driving multimodality. So if we look at our market here, we see that the market is expected to grow at 4% a year across all lines of business. We see in blue our domestic market, in which we are building and growing on our normal presence, but we are also investing in the green area, especially Germany and East Europe, where we are leveraging the GTS presence, as well as the Middle East, where we're increasing the mobilization. So going to the business update, we have three micro trends, and now we are a sustainable digital global mobility player. We're delivering sustainability, we're driving scalable digital solution, and we're expanding to global mobility. And to do that, we have three key business drivers. On the left, signaling. After the acquisition, now 2 years ago, of Thales ground transportation system, we are a global full-range provider of signaling system. In the middle, we have our rolling stock. We are also a global full-range provider of rolling stock. And on the right, it's our new leg, our business stream. It's digital, where digital products and services based on HMAX or new solutions like autonomous driving or revenue collection are creating a new area for our business unit. By going a little bit more in detail with this business portfolio, and we can have a look at the revenue mix. Signaling now, with the acquisition, it's at 52% of our revenues. Rolling stock is 37%, and digital, it's already at 11%. But looking at the lower side of the slide, we can combine the revenues that are recurring or software-based that are now at 76%. Last year, at the Investor Day, we said 74%, so it's 2 points more. But also, if we see on the top right corner of the ball, we see how strong we are in positioning. So we are strong on signaling, we are strong on rolling stock, but less, and we definitely are strong in digital. So our projection for the next year, it's keep on investing and growing in signaling, growing in rolling stock in a selective way with more high speed in which we have a strong positioning, keep investing in getting more orders on service, and of course, digital, which is a very important part of our strategy. For sure, in order to support this business direction, we have key action pillars for sustainable growth. We have geopolitical tension, we have market penetration, operational transformation, but I would like to concentrate on what is very important. On one side, the backlog execution, because we have a strong backlog. On the other side, the big change that agentic AI is bringing to our processes, or what we can offer in terms of digital mobility. So in terms of backlog, we have a record backlog at 7.1 trillion. You see the dark part of the signaling, which is increasing compared to last year, but also we have a 40% of a well-balanced backlog, which is service backlog. On the right, it's the timing of the revenue recognition. We can see that 90% of the revenues for 2026 are already in our backlog, but also 2027, it's almost there. And from 2028 onwards, 50% is already coming from service. Profitability as well, it's growing. We achieve a 20.3% profitability. We have a plan for this year, 21.4, and 22 in 2027. We are implementing agentic. We have already 90 AI agents. That's only related to some part of engineering. we can get not only productivity, but faster time to market and also an improved product performance. There are some examples I would like to stop on how we do in the bidding documentation and preparation, how we do diagram generation or software coding. This is a big help in our processes. But also we are offering, and our value proposition to customer, it's really important when talking about digital mobility. We've seen before the free area of rolling stock signaling multimodality. We have data, we have domain knowledge, and on the right, we have a big expertise coming from Hitachi Digital on digital service. Now, OT and IT are becoming really strong because HMAX turn millions of data points into actionable insight that reduce cost and enhance passenger experience. But we have an advantage here. So the same slide, it's telling us why we are different from other industries or other players. We have a physical layer, which is the OT part, with proprietary sensor technology. Told you about Omnicom. We have operational integration, domain knowledge. On the right, we have the digital layer, like digital expertise, language model, visual language model coming from Hitachi Digital. But at the bottom, we also have the architectural layer. So we are not the AI provider. We have much more. We own the data, we own the competence, we don't own the physical layer and the architectural layer with cloud architecture, cyber capability, or even internal data center. This is a big advantage and a differentiating factor. Of course, AI is bringing a very big benefit on our products. That's an example of physical AI. From legacy traditional tram, you see on the right what's new, an autonomous tram. So we are implementing physical AI to bring a full driverless operation. And I want to show you a few seconds of what we can see from inside the driver cockpit. You see how our cameras and sensor are digitalizing the reality in order to be able to be fully autonomous with a full implementation of physical AI. Let me say also that we can stay at the edge of the technology thanks to our expertise in vehicle and signaling, but also thanks to One Hitachi capability and large framework agreement coming with NVIDIA for edge computing and deep learning, with Google Cloud for AI training, data generation, cybersecurity management, or with Microsoft with Gen AI, agentic AI, or digital engineering. The market, it's growing. The total accessible market, it's about 3 trillion yen. As Tokunaga-san said, half of it, it's maintenance optimization, but also energy efficiency, or as I said before, advanced mobility like autonomous driving. And the pipeline of opportunity is growing. You can see that we have over 100 identified opportunities in 20 countries. And last year, we had a pipeline of 200 billion yen. This year, we're working a pipeline of 600 billion yen. So this is a momentum we're building this year. Last year was the first year. Now we're really getting into the sales pipeline of HMAX. Now let's have a look at the figures. We've been growing steady in both revenues and profitability. At the bottom, we have our profitability. We were 5.5% in 2022. We closed 2025 at 9.2. We have a plan for the year at 9.9 and 11 plus in 2027. To achieve the 11%, we have, as we have seen, margins coming from a better backlog. We are synergies and other efficiencies. We are completing the acquisition of Thales GTS. There are 50 billion yen coming from the synergies of GTS. We are investing on new platform, and a big part is coming by improvement driven by digital and the mix of revenue that we have seen at the beginning with the free business line. I want to talk also about investment, cash conversion cycle, and return of invested capital. We're growing our investment. We're preparing the next generation platform. Still, we want to contain investment. We don't want to go over 3.5, 3.6%, but it's important we maintain the edge in technology. In the middle, we have a strong cash management. We were 60 days last year. We reduced 10% at 54.3 days this year. We have the target at 37. And the ROIC, it's also growing. I have two lines here. The blue one, it's without a PPA coming from acquisition, and the thin one, it's with the PPA. Of course, the two lines are converging. In 2 years' time, they will be almost the same. What is important is to see the run rate. In 2025, we closed at 12.5, which is higher than our expectation. This is the run rate. And that's why in the dotted line, we are changing our outlook because we are improving our projection of the ROIC due to the good performance of the last year. Going to the outlook of 2030, we have a 10-year strategy, and now we are going beyond. We started at 353 billion. We grow 3.5 times in 2025. We have the target at 1.6 trillion for 2027 and 2 trillion, as said last year, for 2030. We have been growing organically, but also through acquisition. Breda, STS, GTS, and in green, what we said before, Omnicom and Clever Devices. We're quite proud about what we were. We were traditional domestic rail OEM. Now we are a global player in digital mobility, and we're planning the next step, which is most likely an acquisition that we are working on. Of course, profitability is important, and to achieve an ambitious target, we have two important steps. One are cumulative saving of over 60 billion yen by 2030, coming from AI implementation, but also with a strong cost containment plan that already started this year and that we are implementing, and we expect the full benefit after 2027. But also growth through investment in new digital capability. So as a conclusion, we have a strong foundation. We are a sustainable digital global mobility player with proven execution and global scale. We have a market with long-term tailwinds supported by transformation in structural mobility. As a strategy, we're accelerating portfolio shift to signaling, high-speed train, and digital service and recurring revenues. We have execution, which is very important. We have key strategic action pillars underway to drive sustainable growth in a fast-changing market and transform record-high backlog. Innovation is so important. We want to be at the edge. We're driving the next generation of mobility through digitalization, multimodality, autonomy, agentic AI, and our outlook is a trajectory to sustainable, profitable growth through 2027 and beyond. Thank you very much. I leave the stage to my colleague, Amiya-san, for the connected industry. Thank you very much.